The year 2025 began with a shocking revelation in the Indian banking sector. New India Cooperative Bank, a trusted institution for many, found itself at the center of a massive fraud. A staggering 122 crore rupees had vanished into thin air, leaving behind a trail of questions and shattered trust. The scam, which unfolded in the Prabhadevi and Goregaon branches of the bank, sent shockwaves through the cooperative banking sector. The scam came to light during a routine inspection by the Reserve Bank of India in February 2025. The RBI's scrutiny of the Prabhadevi branch uncovered a gaping hole of 112 crore rupees in the bank's coffers. Further investigation revealed an additional 10 crore rupees missing from the Goregaon branch, bringing the total amount embezzled to a staggering 122 crore rupees. The discovery sent ripples of panic among the bank's customers, many of whom were small depositors who had entrusted their hard-earned savings to the institution. The New India Cooperative Bank scam serves as a stark reminder of the vulnerabilities that exist within the financial system. It highlights the critical need for robust internal controls, vigilant regulatory oversight, and increased awareness among customers to safeguard against such fraudulent activities. As investigators dug deeper, a web of deceit began to unravel, revealing a meticulously planned scheme orchestrated by individuals entrusted with the bank's finances. The scam has not only resulted in significant financial losses, but has also shaken the confidence of the public in cooperative banking institutions. At the heart of this fraud was Hitesh Mehta, former general manager at New India Cooperative Bank. Mehta rose through the ranks to a position of authority. This position became his tool for embezzlement. His accomplices included Dharmesh Paun, a real estate developer, and Abhimanyu Bhawan, the former CEO. Paun received over 70 crore rupees. Bhawan was implicated with nearly 1 crore rupee. Their arrests sent shockwaves through the community. Mehta, Paun and Bhawan were exposed as masterminds behind the scam. Their actions resulted in significant financial losses and betrayed trust. The investigation revealed a nexus exploiting their positions. This breach led to calls for stricter regulations and accountability. The case serves as a reminder of the need for transparency and ethical conduct in financial institutions. Hitesh Mehta, leveraging his position as the head of accounts, was the linchpin of the entire operation. He had access to the bank's safes and used this access to siphon off funds systematically. His modus operandi was audacious yet simple. He would instruct bank staff over the phone to withdraw large sums of cash from the safes. These withdrawals, often amounting to 50 lakh rupees per instance, were then handed over to individuals designated by Mehta. Two bank staffers later confirmed to investigators that they had on numerous occasions followed Mehta's instructions and handed over large sums of cash. This systematic siphoning of funds continued undetected for years, highlighting a clear lapse in the bank's internal control mechanisms. The misappropriated funds were then channeled through a complex web of transactions to obscure their origin. Investigations revealed that some of the money was laundered through hawala transactions, finding its way into foreign accounts. A significant portion was also deposited into two trusts, the details of which were shrouded in secrecy. Further investigation revealed that Mehta and Bhawan had colluded to bypass the bank's cash retention limit, which had been increased from 10 crore rupees to 20 crore rupees in 2016. They had deposited 33 crore rupees in March 2019 and a whopping 99 crore rupees in March 2020 at the head office, exceeding the permissible limit and further facilitating the embezzlement. The embezzled funds were transported in bags marked 124 Pro, a detail that emerged during the investigation, raising further questions about the audacity and meticulous planning of the scam. The RBI, in response to the massive fraud, acted swiftly to mitigate the damage and protect the interests of the bank's depositors. The central bank imposed stringent operational restrictions on the New India Cooperative Bank, limiting its ability to conduct business as usual. These restrictions were aimed at preventing further financial irregularities and stabilizing the bank's operations. In a significant move, the RBI also appointed an administrator to oversee the bank's affairs. The administrator's role was to take stock of the situation, assess the extent of the damage, and initiate the recovery process. This step was crucial to restore some semblance of order and ensure that the bank's remaining assets were protected. The RBI's intervention, while necessary, sent a clear message that such large-scale fraudulent activities would not be tolerated. The central bank's actions underscored the importance of regulatory oversight in maintaining the integrity and stability of the financial system. The New India Cooperative Bank scam has prompted a wider debate on the need for stricter regulations and enhanced supervision of cooperative banks in India. This incident serves as a wake-up call for regulators and stakeholders to work together in strengthening the cooperative banking sector and protecting the interests of depositors. Section 5. Protecting your financial well-being. Lessons from the New India Cooperative Bank scam. The New India Cooperative Bank scam serves as a stark reminder that even seemingly trustworthy institutions can be vulnerable to fraud. It underscores the importance of being proactive in safeguarding one's financial well-being. Here are some crucial steps individuals can take to protect themselves. Be informed and vigilant. Stay informed about common banking scams and fraudulent tactics. Regularly review your bank statements and report any discrepancies immediately. Verify bank communications. Exercise caution when receiving communications, especially those requesting personal or financial information. Verify the authenticity of emails, text messages, and phone calls by directly contacting your bank through official channels. Use strong passwords and two-factor authentication. Use strong, unique passwords for your online banking accounts and enable two-factor authentication whenever available. This adds an extra layer of security, making it difficult for unauthorized individuals to access your accounts. Report suspicious activity. If you notice any suspicious activity in your account or encounter any fraudulent attempts, report it to your bank immediately. Timely reporting can help mitigate potential losses and aid in preventing further fraudulent activities. Section 6. The importance of vigilance, recognizing red flags and acting swiftly. In today's digital age, where financial scams are becoming increasingly sophisticated, it is more crucial than ever to remain vigilant and recognize the red flags of potential fraud. Here are some warning signs that should raise alarm bells. Unsolicited communications. Be wary of unsolicited emails, text messages, or phone calls requesting personal or financial information, even if they appear to be from a legitimate source. Suspicious links or attachments. Avoid clicking on links or downloading attachments from unknown or suspicious sources, as they may contain malware designed to steal your information. Unfamiliar transactions. Regularly review your bank and credit card statements for any unfamiliar transactions. If you notice any discrepancies, report them to your bank immediately. Pressure to act quickly. Be cautious of communications that create a sense of urgency or pressure you into making a quick decision. Scammers often use this tactic to prevent you from thinking rationally. Section 7. Strengthening the system, regulatory oversight and internal controls. The New India Cooperative Bank scam has exposed vulnerabilities within the cooperative banking sector, highlighting the urgent need for strengthened regulatory oversight and robust internal controls. Enhanced regulatory framework. Regulators must implement stricter guidelines and enhance supervision of cooperative banks to prevent similar scams from occurring in the future. This includes strengthening capital adequacy requirements, improving governance structures, and increasing the frequency and rigor of audits. Robust internal controls. Cooperative banks need to establish and maintain robust internal control mechanisms to prevent and detect fraudulent activities. This includes segregating duties, implementing strong authorization procedures, and conducting regular internal audits. Whistleblower protection. Creating a safe and confidential channel for whistleblowers to report suspected fraud or misconduct is crucial. Whistleblowers play a vital role in uncovering wrongdoing and protecting the integrity of financial institutions. Section 8. The human cost of financial fraud impact beyond monetary loss. While the financial implications of the new India Cooperative bank scam are significant, it is crucial to acknowledge the profound human cost associated with such fraudulent activities. Loss of trust. Financial scams erode public trust in banking institutions, making individuals hesitant to engage in financial transactions or invest their savings. Emotional distress. Victims of financial fraud often experience emotional distress, including anxiety, stress, and a sense of betrayal. The emotional toll can have long-lasting impacts on their well-being. Reputational damage. Financial scams can severely damage the reputation of individuals and institutions alike. Rebuilding trust and restoring a tarnished reputation can be an arduous and lengthy process. Section 9. Restoring trust, rebuilding confidence in the cooperative banking sector. The new India Cooperative bank scam has undoubtedly shaken the confidence of the public in cooperative banking institutions. Restoring trust is paramount for the long-term sustainability and growth of the sector. Transparency and accountability. Cooperative banks must prioritize transparency in their operations and communicate openly with their customers. Holding individuals accountable for their actions, regardless of their position, is crucial to demonstrate a commitment to ethical conduct. Customer education and awareness. Cooperative banks should invest in customer education initiatives to raise awareness about common banking scams, fraud prevention measures, and their rights as customers. Strengthening corporate governance. Implementing strong corporate governance practices, including independent boards, effective risk management frameworks, and ethical codes of conduct, is essential to foster a culture of integrity and accountability.